Hey, good morning, options traders, and what's happening, everybody? Well, I received an email from one of our traders asking about the differences between an exponential moving average versus your plain old simple moving average. And he wanted to know what makes it exponential, what are the calculations, and why would you use an exponential over a simple moving average? Well, they're all good questions, and you've probably seen exponential moving averages, or at least heard about them, maybe while looking at pull-down menus on your broker's platform, but most people don't really know what they are. So I thought this might help everybody in the group. So what is an exponential moving average? How is it calculated? And why would you use it? So to understand the differences, we have to start with a little review of a simple moving average. Remember that a simple moving average weights each day the same. Each candle on your chart gets the same weight. So if we have, for instance, a 50-day moving average, it adds up the closing prices for the past 50 days and divides by 50. It's just your straight up, plain old average that you're used to calculating in school. Add them up, divide by the number of days in that period. And when you do this, you get a true average of past prices. And for this reason, it's usually better to use a simple moving average for support and resistance. And I have talked about in several videos with the moving average patterns and support and resistance levels, and always have simple moving averages on my charts for this very reason. So a simple moving average, here's what it looks like graphically. Let's just say that for simplicity, these are the closing prices 1 through 10. If we want to do a 5-day moving average, we would take the first 5 days in our series, add them up, divide by 5, and in this case, we would get 3. So that would be our first point on our moving average chart would be 3. For the second point, we simply slide this window over by 1 day. So we would look at the next 5 numbers, 2 through 6, add them up, divide by 5, and now we get 4. So our moving average has moved from 3 to 4. What happens for the next point? Well, we slide the window over 1 more day. We would look at 3 through 7, we add those numbers up, divide by 5, and we get 5. And so you can see what's happening. We're just using a rolling window that you define. If it's a 20-day moving average, you would have 20 closing prices in here, or 20 candles. Looking at those closing prices, add them up, divide by 20. All right, so the thing to see is that each day gets the same weight. But if we were using an exponential moving average, on the other hand, the last day in the series here, each time we calculate it, gets a little added merit, little added bonus to it. It's accounting for more of the weight. And that's just because the more recent prices are probably a better predictor of what's going to happen in the future. So again, the exponential moving average puts more weight on the recent prices. And that's again because the recent prices are more likely to be representative of future prices. Now that doesn't mean that they are predictive, and it doesn't mean that they are better. It just means that there are times that we might choose to use an exponential moving average over a simple. So the thing that we're going to do for an exponential moving average is to apply a weight to the most recent day. And in addition to that, we will also use previous EMAs to calculate today's moving average. So we'll look at a detailed example in just a moment. But the main thing about the EMAs is that they are quicker to respond. They will turn up quicker before a regular simple moving average, and they will turn down quicker. So this is the main reason for using them, is that they are probably better for short-term trading. But that doesn't mean that they're necessarily better. You will probably get a lot more false signals as well. So I know that everybody likes the exponential moving average. It sounds technical, it sounds complicated, and it sounds fancy. It doesn't necessarily mean it's better. And as you'll find out, there's usually not a very big difference between the two. But let's take a look at the key point here is about applying a weight. How would we figure out this weight for the most recent candle? Well, the idea is that the weight is only applied to the most recent day. So if we have, let's call it an N-day exponential moving average, where N is the number of periods. So if it's a 20-day exponential moving average, N would be 20. If it's a 50-day exponential moving average, N would be 50. And once you've defined that period, what you're going to do is to calculate the weight. And the weight is always found by this formula. You're going to take 2 divided by N plus 1, N being the N-day EMA that you choose. Now notice that I've highlighted the numbers 2 and 1 in green, and that's because they are just fixed. They're constants. They never change. So if we have a 20-day EMA, for example, to find the weight, we would take 2 divided by 20 plus 1, or 2 divided by 21, and that comes up to 0.095. If we used a 40-day, we would take 2 divided by 41, and so on. So one thing that is a result of this, because these numbers are fixed, is that if you double the EMA, you will cut this weight in half. And if you cut the period in half, you will double the weight. But once we have figured out the weight, it never changes for that entire chart. So it sounds a little complicated. It's actually not that bad, but let's go over to an Excel spreadsheet and look at a detailed example with NVIDIA. Okay, so now we're into an Excel spreadsheet, and I've got NVIDIA, some past closing prices. That's all we need. So the first thing we have to do if we're going to calculate a 20-day EMA is I need to start somewhere. And I don't have an EMA yet, so we're going to start with a simple moving average. That's what's always going to start our EMA. So we're going to take the first 20 closing prices right there, add them up and divide by 20. And that gives us that number right there, 421.97. So that becomes the start of my EMA. So my first point, even though we're calling this the 20-day EMA, the first point is actually an SMA. Now from this point forward, we really do not need our SMA. I'm just going to do that so we can compare the graphs. But other than that, we really don't need the SMAs anymore. So how do we find the next period? Well, we're going to take the next group of 20 days, add those up, divide by 20. That comes up to 424.20. So again, I don't need this for my EMA calculation, but what I do need is the net change. So normally we would do a net change like this, 446.60 minus 447.98. And we'd say this is how much the stock went up or down by that day. We're doing a similar thing, but we're going to use the EMA. So I'm going to take 446.60 minus this number, 421.97. And that comes up to 24.63. And this is the number right here that I'm going to apply my weight to. So if you remember from the presentation, it was 2 divided by 21, or 0.095. So we're really tacking on about 9.5% onto this net change. And whatever that number is, I'm going to add it to this previous one right here in green. And that gives me 424.32. And so the process just continues. For this price, this was the next closing price. The simple moving average would be found from those 20 days. So again, we don't really need that for the EMA calculation. We do need the net change. So I'm going to take the closing price of 434 and subtract off my 20-day EMA. And that's going to give me 968. And it's to this number, this difference, that I'm going to tack on this 0.095 multiplier by. Whatever that number comes up to be, I'm going to add it to the previous EMA, 424.32, and that gives me 425.24. And so this process just continues. And so once we get our series all charted out, if I graph those numbers right there, we get the line in red over here in our graph. And for reference, we're going to compare it to the simple moving average, which is here in blue. So the first thing to notice is that, does it really look like there's a terribly big difference between these two moving averages? Not really. But you will see that the red, the exponential moving average, is a little faster to turn. You can probably see it up here a little better, where the red line turned down through the blue first, and then it turned up through the blue. Right here you can see it turned down through the blue. It's just a little faster at moving. But again, that doesn't necessarily mean it's better. It can give you some false signals, and a lot of times for the longer term moving averages, we'd rather look at something that is a little slower, but probably a lot more stable. But again, take your pick. It depends on what you're doing. So now that you understand how the EMA is calculated, let's go down to the bottom of our numbers and see how we did. So we've got 769.54. So let's go over to eTrade and to Thinkorswim and find out how to put an EMA on your charts, and let's see how we did with our calculations. So now we're into the eTrade platform, and I've got NVIDIA for my ticker. So if you wish to put on an exponential moving average, come up here to Studies, come down to All Studies, left mouse click, and over here under the M's is Moving Average, just a regular plain moving average. So you click there, change the period setting here, so to keep that in line with the presentation, let's make that 20. But here is where you change it from simple to exponential, right there. So click there, choose Save, and there is your exponential moving average. So for starters, let's go over here to the right and see how we did. 769.54, exactly what we got on the Excel spreadsheet. So now you've got a better understanding of what that is that you're looking at. Now, just for comparison, let's go back up to Studies, All Studies, Moving Average, and I'm going to leave it at simple. Let's change this to 20, and let's make it blue. Choose Save. So you can see that there's not really a big difference. You can also tell that the red turns down through the blue faster, it turns up through the blue faster, but it's not really all that different. The main reason for using it is to try to get these signals sooner. But again, if you're trying to use it for support and resistance, I think the simple moving averages are much more solid just because you are looking at true averages. But hopefully that'll give you a nice little comparison. So now let's go over to the Thinkorswim platform and see how to put it on TOS. So now into the TOS platform, I've got NVIDIA on the chart. Come up here to Studies, come down to Add Study, and then over here on the left you will see Moving Averages, and then in this flyout menu right up in here is Moving Average Exponential. Left mouse click, and it's just that simple. So as always, you'll probably want to come in here and change some of these settings, if for no other reason the period. But let's go to Studies, choose Edit Study, and this menu over here on the right shows us everything that's on the chart. So right now I've only got the exponential moving average, but if you have several on your chart, you'll need to find the one that you're looking for, click the cogwheel, and there it is. So the default length is 9. Let's change that to 20. We'll leave it at closing prices. As always, Thinkorswim will give you the ability to customize this a little bit better. Let's make it red. Maybe we want to brighten them up a bit, make it thicker. Change it up the way you want it. OK, apply, and OK. And there it is. And if you look to the right here, 769.52. Exactly what we came up with. So I hope that at least gives you a better understanding of what an exponential moving average is, when you might want to use one, and when you might want to use a simple moving average. Now, how you use those moving averages is a completely different story, but we'll have to save that for future videos. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.